Hey guys, potential shift here. Trade like it's 2026, not 1996. Welcome. I hope you can make the shift. Today it is Friday, February 27th, and yesterday Nvidia tanked. All right, tanked. After reporting great numbers, beats all around, beat in revenue, beat in EPS, beat in guidance, which is probably most important, and yet it went straight down yesterday, right? So what's up with that? All right, let me explain it to you here. And it's a rather basic explanation, but it's also one that people really strongly resist accepting. All right, even though I think in the back of your minds and I think in people's guts they sort of know this, but they really resist bringing it up to the surface. All right, and it's this simple. The algorithms control the market, all right? The algos are 80% of the trading. And the algos are trading on game theory, all right? Game theory. They don't care about the fundamentals. They don't care that Nvidia beat all around and now the stock looks better. That's not what they care about. Warren Buffett would care about that. Buy and hold investors, people with a portfolio care that they beat on the numbers. If you're going to be holding the stock for a few years, you should care that it beat all around, all right? And you should buy it, right? But short term, day to day, for day traders and for swing traders, good numbers means almost always that the stock is going to go down because that's what the algos do. That's what game theory tells the algos to do, all right? Because they know the retail traders and short-term traders are going to see good news, they're going to buy, and they're short-term traders, right? So they've got outs, they're not looking to hold for forever. All the algos have to do is keep pushing it lower, and all those people who are buying, they're going to take their money because eventually those people are going to give up, all right? And when they give up, the algos have cashed in. After that initial wave of taking the money off of the retail and the short-term traders, then the stock will actually act like the way it's supposed to act, all right? So after a few days of punishment, nobody knows quite how long, but they'll just punish the stock until finally retail traders and short-term traders who are bullish on it give up, and then they'll let it go higher, all right? And then they'll actually let it reflect the results. The funny part is that this exact pattern has been happening for years. And in every time you see a positive economic number, the market goes down. Every time you see a bearish event, the market goes up. And the same with earnings. Every time something bullish occurs, it goes down. Every time something bearish occurs, it goes up. It happens every single time. And yet people still go online and still on CNBC and still write articles, scratching their heads, coming up with reasons. Well, I don't understand why this happened. If something happens over and over and over and over again, and it happens every single time, there is a reason behind it, okay? And this reason is pretty simple, but it is difficult to accept. I understand that. I struggled with it for a long time. I know it's just not intuitive, okay? It's not intuitive. That's all it comes down to, I guess. When a stock has good news, when it's a bullish event, it should go up. That is intuitive, right? That is not the way the stock market works, right? The stock market doesn't do intuitive. If it did intuitive, everybody would be rich and everybody would make money. That is not what happens, okay? The stock market does the opposite of intuitive, all right? So when you get a bullish event, this is the chain of events that happens. People see the bullish event. They see Nvidia with the great numbers. They see that, the unemployment numbers are whatever, low, it doesn't matter. It's a bullish event, right? Retail traders think, let me buy, especially active traders like me and like you, all right? Day traders and swing traders and options traders, right? Bullish event, buy, let me get calls. All the algos have to do to make money then is drive that stock lower until we give up, all right? And when we give up, they will have taken our money. And after that, the stock can actually move in the direction it's supposed to after they take our money, all right? That's it. That's game theory. That is the market 101. And it happens over and over and over again, and nobody talks about it. And I'm not sure why, quite honestly, but I think the sooner you understand that, the sooner, not even understand, the sooner you accept that that is the truth of the market, that the market doesn't do obvious. The market doesn't do intuitive, all right? Look at Nvidia yesterday. Nvidia beats all around, beat on all the numbers, everything bullish, straight down. Because people were buying it because of those good numbers, and the algos, all they had to do to make money was sell until they forced those bullish hands out. All right. That's how the market works. All right. So, yeah, try and let that sink in. I think the sooner you do, the sooner you'll be a profitable trader. It's a big piece of the puzzle, guys. A big piece of the puzzle. All right. Yeah. Potential shift here, guys. Subscribe for more tips, and good luck out there.